Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Well, hello, everybody, and welcome to a New Year's edition of the Broker Bulletin. I'm delighted today to be joined by my brother, Dan White, who's the Managing Director of the Ray White Group, and also by Nerida Conisbee, who's the Chief Economist of Ray White. We're looking today, no surprise, obviously, what we think is going to be happening, our forecasts, our crystal balling for 2026. And probably just as a way to start it off, my father, Dan, spoke a lot about there was two types of forecasters, those who knew they didn't know and those
those that don't know and those that don't know they don't know.
Correct. That's it. We're going into an environment now where this was never a big part of what we used to do, but we're getting so much better at it now. And Nerida coming in has given us so much more structure and ways of looking at the future. And it's a lot harder now, though, than it's ever been, I think, to predict what's going on. And we were just talking before, Nerida, about what was once certain one week, almost the next week appears as there's something else comes out. And that certainty is almost now certainly the opposite. How do you think about just the volatility and the change that's happening? Have you seen this before? Is this something that we've got history around, or is this something that's this volatility, this change, is it something now that's relatively new?
Every cycle is different. And so I think you can look historically at what's happened and make some assumptions about what will happen. But particularly things like interest rates, we know clearly a drop in interest rates drives the market. If they increase, it slows it down. At the moment, it is very uncertain. On one hand, inflation is coming back, but unemployment remains very low. The interest rate outlook is quite different. When we have a look around the country, the market's been exceptionally strong. So last year we saw 12% price growth. It was stronger than we expected at the start of last year. Obviously, the 3 interest rate cuts made a difference. But when we look around the country, it is very diverse in terms of what's happening. So on one hand, you have interest rates, and that's the focus. And, everyone feels like the market is really driven by that. But you head to a city like Perth, and there's enormous housing supply shortages. There's quite a lot of population growth, a lot of government investment that's really driving it. Head up to southeast Queensland. Gold Coast now has a $1.4 million median. It's getting close to Sydney. So we've seen a very big adjustment in that market. And then Melbourne is really weak. So I think on one hand, we do look at aggregates and we look at aggregate drivers, but on a city by city basis, it can be vastly different what's happening.
And even within cities now too, I know you're talking about stimulus of first home buyers, how that's affected, say, the lower end of the market. And then you've got, different pressures in different cycles. So it'd be great to unpack that a bit. And how do you think about markets, plural, and even within a city, how you think about that and obviously predictions going forwards. So, Dano, good year for Ray White in 2025. How you feel about what's your reflections back in on what came out of 2025 from the real estate market and either trends that shaped it, new regulation, new rules, new ways of doing business?
Well, strong year. Volumes obviously were up well on the year before. She never mentioned price growth. So overall, the headline figures of revenue and volumes were really good. Standout markets, probably say obviously Queensland, SA, WA could have been, but stock was so tight there. And importantly, we saw a good recovery in Victoria. I think looking forward, it's interesting to see Victoria obviously much lower, hasn't had the growth that other states have had. So that affordability factor in Victoria should hopefully play out really well in the year ahead. And across, I think the market have obviously become more and more a political issue. We've had a lot of discussion around consumer protection, especially around buyers, about in the marketplace, concerns around underquoting, affordability. So there's definitely a lot of forces at play on a regulatory level seeking to maybe give buyers a much better experience in the market than they probably had done before. And that's starting to result in some new legislation taking place that seeks to sort of have a bit of an impact, to be honest, with the way in which we market property. So I think the strength of the market the last 4 or 5 years is certainly built up now to playing out in terms of how we operate as a group.
Yeah, it's going to be interesting to unpack some of that as we go. What are the key metrics you look at when you're assessing the market and you're looking at how the group's going? What's the things or the KPIs or the key measures that you pay most attention to?
Yeah, we've got the energy sort of board, which is the early phase phone calls and appraisal numbers, which we monitor. And we've got targets around the group on that, whether that's going up. And then the results board, which is really, obviously number of sales and dollar value of sales. The number of sales becoming increasingly important metric as well, rather than dollar value, because the concern is we're just riding the market, 12% growth. We've pat ourselves on the back, had a good year, but really the market's just gone up 12%, which is pretty blessed, when you think about that concept. So much more focus on input, which is things I spoke about before, especially around appraisal numbers, open home numbers.
Yeah, you're really looking more at activity, aren't you now? And I've seen some walking into your office, seeing some of the graphs you now have on your boards and stuff, and a lot more around that top of funnel upstream activity.
Which is a big change. It's changing habits. Been a long time to be sort of go from talking about commission volumes versus all the way back to maybe open home attendees or callbacks or whatever. So, big journey we're on to do that. But the data we have really points to, obviously, that's where it all starts. And in terms of looking at the year, you say, how do we look at our forecast looking this year? Certainly the activity from our members around, especially around appraisals and open homes the last few months, we're getting pretty good forecasting now about 3 or 4 months out. Our team, the data team are pretty good. I think they predicted with about 2% the December dollar value of sales. They predicted that in September for December. So, it's not bad considering, where the industry's come from.
So do you celebrate now more the settled result or the activity in the month? Like when someone says, how was your month? Does your brain go to, well, we had a great month, we settled $10 billion, or do you go back to where you sort of looked at, well, we had a great month, we did 1 million phone calls?
I'm probably in the middle of the phase. I've gone away from, we used to celebrate billions of dollars of sales, which is a nice ego number, which is not really relevant in the day. So very much more now I look at the number of sales we make per month, the actual, not the numeric number, and obviously overall commission. But then you get other guys in our leadership team like Mark McLeod and a few of our CEOs that are very much looking at appraisal numbers as being the core metric and open home attendees. That's probably where we need to end up more about talking about rather than the final. Yeah,
number. And then I suppose how you can influence that funnel and conversion metrics as you go and start to. But
and what's good numbers and what, still learning about what are good numbers in terms of conversion, what should we expect. It's a generational sort of process we're working through.
And it seems to be a lot more structured and a lot more predictable. As you said, that's interesting about September translating to December. That's really interesting. Let's go back to 2026 and get out a crystal ball. We mentioned before, Nerida, it's just getting so hard to predict what is going on. But those key drivers always have been, in the past, have always been employment numbers and interest rates. Are they still the core things you look at? Is there anything else that's come in recently that you put over the top of that? Or what do you think are the key drivers this year and what are you looking for to happen?
Yeah, so I don't think we will see the same level of price growth this year as we saw last year, and primarily because the interest rate outlook is looking so different. So, we had 3 cuts last year. At the start of last year, things were looking a lot more negative than they ended up being, and I think those cuts made a difference. This year, it will again be quite diverse in terms of what we see across the country. So, Dan mentioned a lack of listings in markets like Perth. So, if we do see multiple interest rate rises, potentially that will free things up a little bit and we'll start to see more transactions taking place. We've also got a lot of strength at the cheaper end. So when we have a look at the more affordable end, it is moving a lot more quickly than what's happening at the top end, and really being driven by a lot of investor activity. In many states, we hit record levels of investor activity. There were more investors in Queensland than there was in Victoria. And also, of course, first home buyers. So a lot of first home buyer incentives out there. There's a lot of people taking up a 5% deposit scheme or very interested in that scheme, and it has brought forward a lot of demand. At the same time, we haven't really seen much improvement in supply, and so there is a distinct shortage in properties being built that flows through to transaction volumes.
And that seems to be one of the challenges we keep facing. We hear a lot about supply, a lot about cost of construction. How much does that play into your thinking of the year ahead? Do you see any short-term adjustments in supply, or is that always a long-term game? How should we be thinking about that?
So the federal government has set out 1.2 million homes to be built over 5 years. So we're falling well short. I think we're sort of around 850,000, 900,000 over the past 5 years. We've never hit a 1.2 million target. We got very close end of last decade when we had record levels of Chinese investment into Australia, a lot of apartment development. Government has very few levers they can pull. So we will be seeing more and more changes to planning legislation. That's the main one that they can really influence. And so that will continue to flow through. But construction costs are the longer term issue, that they did shoot up sort of 30-40% during the pandemic, and they haven't come back. So they're not increasing at that rate obviously now, but we do have enormous labour problems. We still have a lot of challenges with the cost of products. Things like timber prices are starting to come back. But when we have a look overall, and particularly in states like Queensland and WA, there's a lot of competing projects taking place, which is really pulling a lot of trades off housing, and it's going to the Olympics and it's going to commercial infrastructure, and all of those things really lead to very little development taking place.
Will that change in 2026, or do you think we'll be saying the same thing this time next year?
The number of housing approvals will probably increase off the back of the planning, the relaxation of planning, but I don't think we're going to see a substantial improvement in construction. So we will see more apartments being built. In some places like Victoria, we are seeing planning being relaxed to such an extent that it does put into question the quality of development. So I think that's probably going to be more of an issue, that we can build cheaply, but are they the sorts of homes that people want to live in long term, and will they last is another question. So, I think there's a lot that needs to be considered around building quickly.
In your view now, which states are getting a bit better score? Which one's getting the gold star around leaning into this problem more? Who are you looking at to solve this problem maybe faster than other markets?
Yeah, so Victoria is doing a good job. So they're building a lot. It's not always the nicest housing. So I think, on one hand, they're ticking the box in terms of housing supply, but not always the quality. The states that aren't doing that well are Queensland and WA. And again, coming back to the fact that they just can't resolve the construction issues at this point. So WA in particular, if you have a look at places, let's bring up Baldivis as a good example. 5 years ago, you could buy for, 300,000, 350,000, and now the homes are selling for in excess of $1 million. And that part, the outer suburbs of Perth, really didn't see much development over a prolonged period because the market was so depressed. So when it did start to recover, we just saw this enormous shortage of housing in that area. So it caught up really, really quickly. Sydney is kind of in the middle. It's in the middle in terms of pricing. It's not as slow as Melbourne. It's not as fast as Queensland. But again, I think it is a city that is harder to build, and I think that will be ongoing, and I can't see it being resolved quickly.
We spoke a bit about interest rates, a bit about supply. Unemployment, we're recording this late January. We just had some employment numbers come out. Pretty good ones, actually.
Yeah, great.
Surprising. And you hear, it's hard to know what to put faith into now. Like you hear talk about AI is going to revolutionise the jobs market, and then you see a great jobs record number come out. How much does that uncertainty or that difference of view, how much does that influence what's going to happen to property prices, and what's the view on unemployment moving forward?
It's an enormous challenge because the data coming out is so contradictory at the moment. So even latest unemployment, obviously very, very low, so hitting 4.1%. But then you look at inflation and that's starting to come back. So, for the Reserve Bank perspective, it's kind of a difficult market to look at. And then you have consumer sentiment surveys, and last month, I think it was Westpac said, consumers are really confident, and NAB came up and said, they're not confident at all. And it did rely on the methodologies that they were using, so they ended up coming with quite different results. Business surveys are looking pretty good. And then you have a lot of the global volatility that's taking place as well. So again, things like AI, what's happening in the US at the moment, it really can lead to quite a different trajectory for Australia, and it is really hard to work it out.
Because it looks like we're going to be moving against the trend line. Our interest rates will probably move up first, as I understand, around the world, and we're seeing a lot of other changes happening. How do you see? And there's a lot of talk about government spending, whether that's whether they need to pull that back, start taking pressure off the RBA. Do you think budgets, he's not releasing anything before May. There's no mini budget coming through. So we'll find out in May, I suppose, what the forecasts are. But a lot of talk recently about spending growth. How do you look at that, and what's your thinking around how that's going to start to impact? Will that be a key driver of rates around government spending moving forwards, do you think?
Yeah, governments are spending a lot at the moment, and they don't have much spare cash, and they are putting a lot of money into infrastructure. So, good long term, obviously some really good roads and rail is great for a city, but it does lead less money, and it does put government in a pretty precarious situation in terms of their interest rate repayments. So it does limit how much they can spend in the budget. In terms of the outlook, how it affects housing, obviously it is impacting it very clearly in things like housing construction. It's really crowding out housing construction because a lot of the resources are going into infrastructure. So that's quite challenging. I guess it does also put, the government will likely try and put pressure on the Reserve Bank to hold rates as much as possible. Reserve Bank is independent, so there's only so much they can do. I think also the other challenge is, of course, is that the opposition is incredibly weak at the moment. And even though the Labor Party is very popular at present, we do need a viable opposition to keep things in line. And we don't really have that at a federal level, and in many states we don't either.
It's a good segue maybe to looking at some policy, government policy that happened. Obviously, first-time buyers, you identified that before as being something that was really important. Dan, if you look at government policy moving forwards, there's a talk about perennial talk about CGT, capital gains tax, talk a lot about negative gearing. If the government were more emboldened to look at those policies, which ones would be the biggest impact, you think, on housing? And there's a lot of, obviously, unintended consequences of new policies that come out, no matter how much you go through. What would be some of those, do you think, if the government was tempted to look at that in light of a weakened opposition?
There's a lot of commentators that talk about the concessions in taxation property. They even think, some people describe tax-free home is a concession. And then obviously then it goes all the way down to, say, maybe negative gearing is the most obvious. So there's certainly a lot of people throwing around different ways in which government could change things. Obviously the counterbalance to all the stuff around investors and taxing investment more is obviously the impact it will have on tenants and rents, which we know is a major issue. We haven't talked about that yet, but rental growth in some markets has outstripped property price growth from really high levels already.
In which markets would that have been in?
Rental growth's been particularly strong in New South Wales, in parts of WA, Queensland as well. I mean,
so
most
that tightness of supply is hitting in tenants as just as much as investors are.
Yeah, I mean, we for all this, we hear about underquoting things, the buyers being frustrated by the speed of the market and the price growth. In terms of issues we have in our group, tenancy concerns would be way higher than buyers, in terms of their frustration at the market, how hard it is to find. And so I think there's a really fine line, because local councils are charging landlords a lot of money too, state governments are as well, for the federal government then to go and change it again. It could be very problematic, I think. But politically, we saw the last federal election, 2 federal elections ago, Bill Shorten came out from opposition. He was going to limit the amount of negative gearing. I remember that policy, and that a lot of people said was the reason why he wasn't elected. I think for all the talk around it, I think a government, based on what happened, 4 or 5 years ago, would be very reluctant to go and play with housing.
Even with that one, and you're right, when he came out with that policy, and from memory, I think there was a limit around new, it was going to, negative gearing was available for new construction, but not for older. But the problem is that would mean that every existing property that was owned by an investor, when that was sold, it probably would be sold to an owner-occupier, which means then a tenant would have to move. And they'd have to move typically to properties that are new. And typically that's going to mean either high-rise, high density, or in a different demographic area if you're living in an older part of a city. So there's significant impact on tenants because of those policies, which I never really saw highlighted much in the media. We put out a couple of releases on it, but no one spoke about the downstream impact that was going to have and on tenants having to leave their homes to move to a new part of the city or in a brand new, if that's what drove investor sentiment, which you'd imagine was the intention of any tax policy.
Because the other side of the equation too is that, and probably rightfully so, state government particularly are looking for higher quality tenancy. So they have much higher standards now in terms of how you insulate your home, all those sort of things, ventilation, the various ways in which the various standards obviously landlords need to meet to be able to lease out their property. So you've got one hand higher investment required from landlords to provide tenancy. If that's the agenda, which is probably a right one, then it's pretty difficult to tax even harder again. That's obviously the lowest hanging fruit, CGT, or negative gearing. But I think based on what we saw last time, pretty courageous policy to do it, and it could have massive unintended consequences on the tenancy market, which is a major factor, a major issue. We've got to find ways to, as Nerida said, that the new stock being built, that's not really going to solve the tenancy problem, because most of the new stock being built, because of the construction pricing, is all premium grade. Most new stock is at a higher price point than the existing stock in the market. So by definition, any new stock coming to market will be a higher rental cost than the existing. So I don't think the solution for tenancies is because we simply build more property, because by definition that means higher rents. It's how do you get enough existing housing into the rental market and making sure it doesn't leave it.
Just to recap, so we got volatility, got probably rates, upward pressure on rates coming through in 26, bunch of uncertainty around the world. Construction costs aren't coming down by the looks of it, and we're not going to solve the supply issue as much. Unemployment, pretty good so far. Hopefully remains that way, fingers crossed. Bunch of new technologies coming out which might challenge that. So let's put all that uncertainty into the bowl and shake it up and mix it and see what thinking about 26. What sort of price predictions have you got, Nerida? What are you thinking around in terms of better performers and why, and maybe some of the challenges we're going to face?
Yeah, so I don't think it'll be 12.2% next year. It'll be of this year. I mean, it'll more likely be between sort of 5 and 10%, and primarily because interest rate outlook is different. But then underlining all of that, we're not going to be able to solve supply. Construction costs aren't coming down. So all of those things that drove property as interest rates rose will continue to hold out. So, and then looking around the country, I think a bit of improvement in Victoria. I mean, that has been quite a tough market. It's very affordable at the moment. I think that's really going to help things along. And then a lot of strength at the cheaper end because government has stimulated demand for first home buyers, and they haven't really come up with a solution for supply. And as a result, we will continue to see a lot of heat. So cheaper end, I think, will continue to do really, really well.
And you want to give us some brave predictions on hotspots?
Yeah, sure.
I mean, I'm sure you get asked it all the time. Being you at a dinner party must be frustrating, I imagine. Yeah. You get asked that question a lot. But can you give us any sort of insights for our listeners around what you think for the year ahead?
Yeah, so I think, South East Queensland, I think long term, pretty much the area extending from Byron Bay up to Sunshine Coast is continuing to be really, really strong, and prices have really reset. I mean, if you have a look at Gold Coast now, it's more than doubled over 5 years. Sunshine Coast is really similar. Brisbane continuing to see really strong demand, particularly cheaper Brisbane, really doing really well. Places like Perth, it's a little bit harder to work it out. It's a smaller city, but again, it's very mining dependent. So I think it'll keep growing, but, I don't think it'll be sort of, it could still be double digit, but probably not sort of 15 to 20% that it was running at last year. Adelaide, probably, fairly solid. And then regional areas, it does, we continue to see really strong growth in places that are within commuting distance of capital cities. And that will continue because, if you consider Sydney, for example, moving to Central Coast or Wollongong now is quite a similar commuting distance to moving to Western Sydney. So, that spread of people will continue.
One thing we haven't spoken about, and I sort of hesitate to bring up given it's a whole lot of political connotations at the moment, just past Australia Day, coming into the year, immigration, and not in a political context, but just in a property context. How important is immigration to forecasts for the year ahead and years beyond that? And any comments you want to make around immigration policy and house prices?
We do know that more people puts more pressure on housing demand, but I think the focus is always on international migration. If you have a look at somewhere like South East Queensland, it's not international migration driving it, it's interstate. And so, do you try and cap that and tell Sydney-siders they can't move to Queensland anymore? That's obviously not possible. The other challenge, though, we have is around building housing. If we have a look at back to 2020 when the pandemic started, there was a lot of trades that did move back to their home country. And as a result, we did see severe shortages. We haven't got a lot of those trades back, and that is a big problem. So on one hand, you look at somewhere like Queensland at the moment, they need more people, they need more trades to build the houses, but that creates more pressure on housing demand. So it's a circular problem that's really difficult to resolve.
Do you think we'll be able to, I suppose politically, who knows how they're going to solve that problem or come up with new immigration policies going forwards, but do you think the mix around how we can bring in more skilled immigrants around more skilled migration in trades, is that the area you think would make a big difference to property prices?
It will. They're not doing it well at the moment, but it would make a big difference. Again, when you talk to builders, that's a big challenge for them at the moment. If they have a look at the different elements of construction, it really is labour, and that's hard to resolve. And
are we seeing that through, vocation, through kids coming through into trades? Is that happening more and more at the moment?
Yeah, look, it is. Some interesting research that comes out of groups like HIA where they've calculated that it will take, several decades to train enough trades to build enough homes. So we do need to look at both. We need to look at making sure we see trades as a good vocation and, they get paid well now. So I think, that message has come through quite clearly. But the immediate challenges around housing, on some calculations, we haven't built enough homes since 2007. So this is a long-term issue that's been building for close to 20 years. We do need to import labour to be able to solve it. There's a lot of interest in his modern methods of construction, which is modular, particularly in regional parts of Australia. We are seeing a lot of modular now being used. So there has been a lot of work done on, using robots, moving construction from being on-site trade dependent to being a production facility in a factory. That does resolve things. But, again, there's been decades of underinvestment compared to what's been done overseas.
Yeah, I think it was policy coming up too. We had some lenders who had a difficult time wrapping their head around some of that modular housing. I think that's largely now gone, and I know brokers can now access a lot of those lenders now that are supporting that and supporting their customers into that space. Dan, you led the group through a bunch of change last year, particularly around some of the government policies and, how agents do business. Obviously, that's going to continue to happen. We're going to have regulators look at every industry all the time, look at how they can keep improving customer outcomes. What are the big changes that you're predicting for this year? What's some of the changes that have been good? What are some of the changes that, you think are going to have some unintended consequences? Things we need to look out for.
Yeah, I think the real estate probably a bit behind where the finance industry's been, consumer protection being the guiding light of regulators now versus before it was the Act, the old Real Estate Agents Act where you had certain things you had to do. Now there's an all-encompassing responsibility which is starting to get through. You might say, well, why is it taking so long? But it's sort of it's happening, and that's then driving a lot of not so much looking at the technicalities of the rules now to sort of the bigger picture. How we're making sure that especially around buyers and tenants are being looked after and they're getting a fair go. So that's playing out. So we're seeing a lot more being done, and especially around New South Wales and Victoria for various reasons, but much more regulation around information given to buyers, especially around auction, and the concept around underquoting and also price guides. I think if you had to say in Queensland, there is no price. You can't quote a price. You're not allowed to. In New South Wales and Victoria, now you have to. You have to be quite specific and justify your figures. There are consequences if you get them wrong. What we've seen is in Victoria, the regulation went from no regulation to regulating what you can say to then going further saying, actually justifying why you're given that price guide and giving comparables and giving the evidence about why you've done the price. And that hasn't worked either. So the biggest complaints comes out of Victoria, and the biggest amount of underquoting is in Victoria, even though it's got the most rules. And now to solve the problem again, they're now saying that a week out from auction, you've got to publish your reserve to the buyers. In Victoria. Yeah, they haven't brought it in yet, but they're saying there's a consultancy period and that'll happen sort of sometime mid-year. So I think we've seen more and more regulation in the space to try and give buyers a better position on the auction day. It seems that the more and more rules and regulations we put around it, the more disappointed the people are and the more negative outcomes occur. It's certainly an area that we're sort of trying to sort of have as we know, our role obviously as agents is to create competition, bring people there, be as transparent as possible. But at the same time, once we are sort of having to give out precise price guides, can lead to, everyone loves a price guide until it's wrong.
Yeah.
And there are a lot of them are wrong.
It can be wrong both ways. And often it's wrong because there's a whole bunch of human emotion involved in pricing and bidding and things. It's hard sometimes to get the pricing as accurate as people would like.
There's a lot of misunderstanding. I think one of the things that the government's right, at the moment, no one really knows the rules. So when buyers get the price guide, they're not sure what that means. So I think there's a lot of misunderstanding about what's involved. And because it's gone quite complex, everyone's quite confused about what the rules are. So people say, so in Queensland, for example, because there's no price guide, people get a bit upset at the start of the process saying, what do you mean there's no price guide? How am I supposed to know about this property unless you give me a guide? But at least they know then that it's up to them and that they're there on the journey. In Victoria and New South Wales, because they're given a price guide, for whatever reason, they believe that that's going to sell for around that figure. And so you've got this issue that's continuing to arise. For us, it's really about being transparent with everyone, especially with obviously vendors, but also with the regulator. So all our indications around price, what we advise, what our price guides are, how we base them, what our highest offer's been through the campaign is all now digitised. It's available to the regulator. We're now trialling with the regulator access to that information so they can see it. So really saying, guys, well, it's all here. We're not hiding it. These are the numbers, and this is where they're coming from, and hopefully getting their endorsement about the process we're working through to try and fix this problem, which is this misinformation that seems to be in the marketplace.
Yeah, I know it's one of the big things being trying to bring transparency as much as possible to a process which, quite rightly does frustrate people sometimes. It is a bit opaque, and I think that transparency you're bringing is going to, I think, really bring a lot of positive benefits. But as you say, nothing's going to be perfect.
No.
Do you think it's going to be, do you have any confidence the state's going to get together and have a consistent framework, or do you think it's all going to be separate?
They're getting further and further apart. There's some talk between the different states, but they do run their own race. There seems to be no genuine consultation or any energy around having any consistency around it. Very much a very provincial sort of approach. So, which is sort of interesting in a way, because by doing that, we see what's working in different markets and what's not. So there are benefits to that.
As you say, hopefully we'll be able to work out best practice, maybe at least best impact potentially.
It's interesting that there's in terms of the industry though, there's less regulation or requirements on licensing and training and things like. There's a bit more, but nothing serious. But yet there's a lot more on some of the outcomes and in terms of the process of how we buy and sell. There seems to be very little in regards ensuring the industry is well educated and well trained, which is sort of a bit ironic in a sense, considering we're trying to lift the standards.
Well, I mean, that's always been the DNA the group has, is trying to bring communication, training and standards to the members of the group. So no doubt that's a role you're going to continue to play in this year and beyond. Yeah.
We've got AML coming in this year, which is sort of happening, which will basically require every office to have a compliance officer to be able to be more involved in the vetting of obviously vendors and buyers. That's just a sort of a hygiene process we've been working through. It'll add some cost to the business. Difference of opinion whether it really add more security or more safety to vendors and buyers, considering the checks that are already in place. But that's just an additional level of work that our teams will need to do to ensure they're doing their job.
And no doubt all that's going to drive scale again, right? You're going to have those things are going to be, as you say, hygiene. In fact, what's going to be the law, so it's going to be the base level. That's probably drive a bit more consolidation, I'd imagine, in the industry. That coupled with some of the consumer protection stuff coming in, probably going to be very important for real estate practitioners and professionals to make sure they're up to speed with changes that are going through, and how to make sure that they're still getting the best price for their vendors that they can within a new framework. So no doubt that's going to be a important challenge for you and your team to keep lifting the standards through 2026.
I think that's it's always been an evergreen challenge, but certainly it feels like this year is going to be a big year for that. There's obviously part of the discussion too around improving the industry for some stakeholders is around the auction method and a lot of changing the way auctions are done, because, for whatever reason, auctions been so fundamental to our success. We still think it's the best way for buyers to have total transparency in the marketplace and know exactly what they're paying is market price, $1 more than the next bidder, the story. So it's really the big test for us this year will be advocacy for auctions and making sure that we don't do less auctions, we do more, we do them better. We prove the transparency in the auction process and make sure that the regulators support our efforts in auctions, because if we lose that discussion, where the industry is really on the back foot. So there's a lot of work being done to ensure that our systems we're able to demonstrate best practice, demonstrate transparency, and the fact that we are living up to the spirit as well as the letter of the law.
And I think the auction process is the way that does bring the most transparency, particularly when you can get a framework that can guarantee it's done properly. There's no better visibility or transparency, I think, and it's such an important part of the market for so many people.
We get more complaints from people that got dudded, for a better word, in a private sale than auctions.
Yeah.
I know that doesn't always make the news often, and auctions is very big. It's very newsworthy and prices and everything else. But there's nothing more frustrating from a buyer than knowing they didn't get a fair shot at buying something. When you get a complaint saying, I didn't get a chance to give my final bid, that's a really difficult discussion.
Yeah, you got to get back to a vendor and say, look, we're not sure if we did get you the best price. Whereas we're not sure if everyone did get a chance to be able to put their best foot forwards, and that doubt can be, I've seen it can be quite debilitating moving forwards. We can't go to end of January, start of the year, obviously, and not talk about Gold Coast auctions season. Big auctions on the Gold Coast in January. Way to kick off the year. It's always think been seen. I'm not sure if you still believe is it a forecast for the year? Is it a bit of a marker? How do you feel? Is it still predictive more of Australia, or is it now more local? And how were the Gold Coast auction season in January?
Well, I hope it's a telltale for the year, because it was a ripping January. The guys on the Gold Coast did an amazing series of events. The clearance rates were probably up at all-time highs, you'd say. Mixture of stock, even some of the more prestige end of the market, the middle market, lower market. So, yeah, very strong. Is it a telltale? Yeah, I mean, I think the Gold Coast now is such a big market, right? It's a huge part of the Australian economy now compared to when we were growing up. Remember, there was such a cycle, the Gold Coast. Now it's been consistent for, 7 or 8 years of consistent growth. So, yeah, certainly gives us some confidence going into the year. But as Nerida said before, every market now is got its own dynamics. Really, I think it's the easy days were back in the start of COVID and stuff when the market was all moving together, up or down. Remember that sort of period of time? Now it really feels like generalising on the market, you sound a bit hollow given the dynamics in every state. But certainly the results of January on the Gold Coast should give us some optimism for the year ahead based on what they did.
Well, that's an awesome way to summarise what you think for the year. Just a massive thank you, Nerida and Dan, just for joining me and sharing your thoughts on what you think is going to happen the year ahead. Now, we've got that in the can. We'll be able to come back and assess, give us all a mark for where we were at the end of the year. But I think regardless of what happens, I think that the thing for everyone out there is be tight with your customers, and communication is going to be critical. Who knows what black swans we're going to see, or what events are going to transpire to knock us off our trajectory and have to change something. No doubt there'll be a fair share of that in 2026. And I think the message on everything is stay close to your customers, keep communicating well, and I think make sure that you're executing and delivering a great customer experience, because that at the end of the day is going to keep bringing back more customers into your business. So thanks again, everyone, and look forward to seeing you in your markets during 2026. Have a wonderful year, and see you then.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling, or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.